Hello everyone and welcome to my QuickBooks bookkeeping series. In this series, I will be teaching how to set up and use QuickBooks for all your bookkeeping needs in your small business. Please like my videos and subscribe for more videos like this. This is the second part of my two-part Understanding the Chart of Accounts in QuickBooks video. If you missed part 1, please click on the link above now to watch it. In this video, we will be creating different types of accounts in QuickBooks. We will now look at how to create different types of accounts in QuickBooks. To create a bank account, click on New at the top right-hand corner of the screen. Select the account type from the drop-down menu. We will be creating a bank account, so we will select cash and cash equivalent as the account type. Then we will select bank for detailed type. Enter the name of the bank and enter a description. If you are using account numbers, enter the account number you want to use. Preferably, enter an account number in the range of numbers that represent bank accounts. If you are not using account numbers, you do not have to enter these. Next, enter a default tax code. For banks, the default tax code will be 0. You can also decide to leave this field blank. In the balance field, enter the balance you have in that account as of a particular date. Enter the date as well where you have as of. Now save your new account. To review the history of an account, click on Account History. The Account History report shows all transactions that have occurred on that account, as well as the running balance. Now let's go back to the chart of accounts. QuickBooks allows you to connect your bank account on QuickBooks to your actual bank so that transactions can be updated on QuickBooks as they happen in real time. This feature, however, is only available for some banks in Nigeria. To connect your QuickBooks account to your bank account, click on the little triangle beside Account History to open up the drop-down menu. Then click on Connect Bank. Enter your bank name or URL or select your bank from the banks displayed. Sign into your bank and follow through with the steps. To edit an account, go to your account list in your chart of accounts and click Edit. Make the necessary changes. To stop using an account, make the account inactive by clicking Make Inactive here. This will make the account inactive so you can no longer use it for new transactions. When you make an account with a balance on it inactive, QuickBooks creates an account where this balance is moved to before deactivating the account. If there is no balance on the account is simply deactivated. To display your inactive accounts, click on the gear here and then simply click on Include Inactive. To reactivate an inactive account, simply click on Make Active. You can still review transactions posted to that account in the past by running a report on the account. Now let us create a fixed asset account. Fixed asset accounts are used to track and store the value of your fixed assets. Usually, you would have your fixed assets split into different categories, also called asset classes, depending on how you want them to depreciate over time. By depreciate, I mean how their value reduces over the period when they are being used. Some common asset categories are land, building, plant and machinery. That is typically heavy-duty equipment like your production equipment, generators, sewing machines, etc. Other categories include vehicles, furniture and fittings, typically air conditioning, office furniture, laptops, and so on and so forth. To create an asset account, go to your account list and select New. Select Fixed Asset as the account type and select a suitable asset category depending on the type of asset in the detail type. In this case, I have selected Furniture and Fixtures. Enter a name for the accounts. An account number and the account description. Next, select Track Depreciation of this asset. This tells QuickBooks that you would like to track your asset depreciation in QuickBooks. Next, enter the value of the asset at a particular date. This could be the value of the asset on the date you bought it, or the value of the asset after months of use and depreciation. Also enter the depreciation value as at a particular date. If you are unsure of this value, leave the field blank. Next, save your newly created asset account. For every asset account you create with the Track Depreciation checkbox checked, QuickBooks creates 2 additional accounts. One to store the original cost of the asset and another one to record the monthly depreciation on the assets. These 2 accounts are sub-accounts of the main asset account you created. Fixed asset depreciation is the reduction in the value of an asset due to wear and tear over time. So let's say you buy a vehicle on the 1st of January 2022 for 4,000 naira, and you decide that after 4 years, that vehicle would have used up all of its useful life. This would mean that at the end of 4 years, the vehicle will be worth 0, because every year the vehicle will depreciate by 1/4 of its value. In this example, the vehicle will depreciate by 1,000 naira every year. The annual depreciation value will be posted using the depreciation account created by QuickBooks when you created the asset account. Now, let's rename the 2 accounts created automatically by QuickBooks when we created a fixed asset account so we can easily identify them. As before, select Edit here and rename each account, one for depreciation and the other for storing the original cost at which the asset was purchased. If you are using account numbers, you should enter a suitable account number that falls within the predefined range for each asset category. For accounts that are sub-accounts like the accounts for original cost and depreciation, the account numbers should be used to depict the fact that it is a sub-account. In this case, I have attached a dot and a number after the dot to differentiate my sub-accounts from my main accounts. Save your changes to the sub-accounts. The next set of accounts you should create are your revenue accounts. Your revenue accounts are the accounts where money earned from sales are posted. You can have one or more revenue accounts depending on how you want to see your sales numbers. If you want to see them just as one lump sum, you can have just one sales account, or you can decide to break your revenue accounts along the different products you offer. Meaning, if you have 2 different product lines, you create 2 revenue accounts. You can edit the existing income accounts on QuickBooks for this purpose, or you can create new ones. To show you some examples of how you can do this, we will edit one income account and then we'll create one income account. To create your income account, select account type, income. The detail type should be sales, retail, or sales, wholesale, or revenue general, depending on which one you feel best describes your business. Edit the account name as required and the description of the account. If you use account numbers, enter a suitable account number here and enter a default tax code. Save your entries. The next set of accounts we will be setting up here are your expense accounts. There are two major types of expenses: direct expenses and indirect expenses. Direct expenses, also called cost of sale, refer to expenses that are directly tied to revenue generating activities, while indirect expenses are other expenses required to support revenue generating activities. For example, if you run a car rental business, some of your direct costs will be the cost of buying fuel when driving a customer, the salary paid to the driver, overtime allowance paid to the driver are other examples. Examples of your indirect expenses will be the cost of renting an office, the cost of buying fuel to power the office generator, the cost of buying stationery for office paperwork, as well as marketing costs. Now, let's look at how to create a cost of sale account. Again, you can edit one of the default cost of sale accounts that come on QuickBooks to serve your purpose by updating the detail type, changing the name and description, and entering an account number if you have set up your chart of accounts to use account numbers. You may leave the tax code field blank or enter a suitable tax code. To create a cost of sale expense account, click on New. For account type, select Cost of Sales. Next, select the type of cost of sales accounts you'd like to create. The detail type option are cost of labor, COS, which typically includes things like salaries, overtime, wages, etc. Equipment rental COS, typically for rented equipment that are used in the production of whatever you sell or used directly in the delivery of service that you sell. Freight and delivery COS, which would typically include delivery costs for the products that you sell or services that you offer your customers. Others are other cost of sale COS and supplies and material COS. Supplies and material COS would typically be for raw materials that you use in producing your products, as well as any service or any resource that you need to directly deliver the service that you offer to your customers. Other cost of sales would be used for any other cost of sale item that is not covered by the other cost of sales types that we have discussed here. Next, enter a suitable name for your account. A suitable account number and description for the account. Save your new cost of sale account now. To create an indirect expense or general expense account, again, feel free to edit the default expense accounts to suit your requirements, or you can create new accounts if you have exhausted the default accounts that come preloaded on QuickBooks. Thank you for watching. Please like and subscribe to help reach others who may find my videos useful.